Hey, welcome back, my fellow dividend investors. It's me, ET, and remember, I'm not a financial advisor. I'm not your financial advisor. I'm just a self-taught investor who likes to think of ways to increase one's net worth. And one of the ways that I increase my net worth is by having a dividend portfolio. Now, that's true passive income. And what we're going to do today on this video is we're going to take a look at the performance of my dividend portfolio for the month of October. But before we get into that, let me just tell you ways in which I help grow my dividend portfolio. This is how I grow it. Number one, through my contributions, through buying dividend paying stocks. Also, the dividends help me grow the portfolio because what I do with the dividend payment, I set up a DRIP, a dividend reinvestment program. So what happens is the payment actually starts to buy more dividends or more stocks. And then we have the stock appreciation. If the price of the stock goes up, that value of my portfolio goes up. And then we have dividend growth. Anytime they announce an increase in a dividend payout. So let's go ahead and take a look at the performance in October. Remember, Goldie laying those golden eggs. And in October, we had a total of 23 golden eggs or 23 payouts. Let's take a look. If you don't find a way to make money while you sleep, you're working until you die. And that's one of the reasons why I am a dividend investor. That's not the only thing I invest in. I invest in your growth stocks, the crypto, I got to definitely buy and hold, but also I have a dividend portfolio. And let's take a look at the performance and the changes that I made to reporting on the performance of my October dividends. Now, one of the things I'm doing is this here. I used to look at my dividends as, golden eggs laid by a goose. The goose is the stock. I've changed that now. And now I'm looking at it from the aspect of the stocks are my employees. Think about it. The stocks that you own, you are partial ownership of a company. So I'm starting to look at those stocks as employees. And my expectations of my stock or my employees is to go out and make me money. That's by way of dividend payments. Increase my profits. That's coming through stock appreciation and dividend increases. And bring me new hires. And that's in the form of DRIPs, dividend reinvestment program. And what I'm doing with that is I'm not taking out those profits, I'm reinvesting those profits. I'm buying more shares, increasing my, not necessarily payroll, but my overall number of employees who are out there making me money and increasing my profit. So that's my new perspective on it. And this is the results for October. In October, I had a total of 23 payouts, 23 paychecks, whatever you want to call it. And that totaled $314.20. Now, with this here also, it gives me a projection for the next 12 months. And as you can see, for the next 12 months, I'm projected to average $329.93. And over the course of the next 12 months, it's going to pay me a little bit shy of $4,000. Now, the stocks that I bought in October that I added to my position, in other words, it's the money that I spent. It's not from dividend reinvestment. I bought 20 shares of USOI. That is an ETN, exchange traded note. They're a little bit risky, but this one is pretty much writing covered calls on the USO, and that's tracking crude oil. And that's 20 shares. It's a monthly payer of dividends of 5 cents per share. The DRIP is not authorized on that. And some of those risky plays, ETNs and so forth, they're not going to give you a DRIP on that. The biggest issue with an ETN, they can dissolve that note at any time. All right, so that's what makes it so risky. However, as a result of that, you are going to get a much higher dividend yield or distribution yield. The other one was CAH, Cardinal Health, bought 10 shares. It's a quarterly pair, 49 cents per share. At the time that I was buying it, CAH was down 22% from its 52-week high. 52-week high was 62.96. Quick summary: 30 new shares at a cost of $598.78. That's going to generate me an additional $7.90 quarterly, which equates to a 5% annual yield. Stocks sold in October, didn't sell any stocks. Here are my rules for selling the stock and for selling any one of my dividend stocks. If they cut the dividend, more than likely I'm going to cut the stock and fire them. 20% loss on the initial investment. I've tracked my initial investment. If I get to 20%, I'm going to fire them. If it's exercise, if that particular stock has a covered call, if I can write a covered call on it, I'll do that. And if it's exercise away from me, of course, I'm going to have to get rid of it. And if I need capital for a better investment, I'll go in and I'll take a look at some of my weak performers and sell some of those. Now, for the month of October, the new hire employees that came in, I had a total of 44 new hire employees. Basically, these are 44 shares of stocks that I received from the DRIP. And the recruiters are IVR. IVR is a REIT. It recruited me 33 new hires, full-time hires. PSAT recruited 8. GOF recruited 2, and ORC recruited 1. I've got many part-time employees. Those are the fractional ones where I didn't get a full share. And I'm sure if I add all those up, it'll equate to more full-time employees. But that's how I'm looking at it. That's how I'm tracking it. That's how I'm seeing it. And I'm going to have expectations of anyone who owns a company. Now, this here is my overall tracking sheet. Remember, I had a total of 23 payouts. Here it is. And it's set up like this here. It is alphabetical order. The ones that paid out in the month of October. It's the ticker symbol. You have the price, my share count, what was paid out in the month of October, the annual yield, the current market value, my cost basis, what I paid for it. It does not include any of the dividend reinvestment and new hires that came on board. Now it shows you the profit and loss by dollar amount, profit and loss by percentage. If it's in red, if it's highlighted in red all the way across, that basically means that my P&L is a negative. All right, I have this one here that's a negative. I have this one here, LTC, is at negative 14%. ORC Orchard is at a negative 3%. And then we have SLVO, which is a silver ETN, is down 1%. The only one that's close to possibly being fired is LTC. Now, as we go down this here, the ones that are highlighted, the tickers that are highlighted are the background is in red. That basically means those are my risky plays, my ETNs, electronic traded notes. All right, so let's just go down this list here. We're not going to go down all of them. I want to do this over because I don't want to make this a very lengthy tape. You can go ahead and pause it at any time and take a look at whatever stock you may be interested in there. But if you go here, here are the companies here, and here are the actual payouts. And as you can see, my number one payout for October was IVR, $107. And if you remember, they brought in 11 new full-time employees. All right. What we're also going to do is we're going to take a look. I'm going to pull out about 5 of these that we're going to take a closer look at. At the very bottom of this chart here, you're going to see this is my total count, share count, number of shares that I have, total payout, which we already know was $314.20. The current value of all of those stocks that paid me in the month of October, $32.9. My cost basis, what did I pay for those stocks? It came out of my pocket. That's 24.3, and as you can see, my dollar amount profit P&L is 8,500 bucks. I am up 35%. If you look at the payouts on an annual yield basis, you see that based upon the market value, it's giving me 11% return. Based upon the cost basis of what I paid, I'm making 15%. It's a matter of perspective on how you want to look at it. I'm tracking both. Now, this here is just a real quick summary of the of October's payouts. I call it my October portfolio dashboard. It gives you an idea here. Here, I have a total of 33 dividend paying stocks in my portfolio. Of those 33, 23 paid out. We know how much it paid out. We talked about the cost basis, the current value. We talked about the actual dollar profit and loss, which was a profit, 8.5 thousand, 35%, and we talked about the annual yield. Now, let's take a look at ORC, Orchid International. Here we go. Orchid Islands, it's a REIT. The price is $4.97. Pays out monthly, gives me a whopping, really 60, you can round it up to 16%. I have a total of 105 shares, and this gives me my total for the year and my projected total for the next 12 months here at the bottom. And this here, I did a screenshot of the dividend reinvestment. It actually, remember, I had it listed as bringing in one new full-time employee, but it was actually 1.3. Let's take a look at GOF. All right. GOF, current price $19.15. Monthly payer pays 11%. I have a total of 273 shares. And once again, you can take a look at the projected 2021 payout and what's going to pay out for the next 12 months. At the bottom, once again, you can see that GOF brought in 2.5. Gave me 2.5 new shares, or 2 full-time employees and 1 part-time guy. Let's take a look at CHI, CHI. This one here, current price $15.99, monthly payer, 7% distribution yield, and I have a total of 255 shares. And you know the rest when it comes to 21, 22. Look down here at the dividend reinvestment. You can see that CHI brought in 1.5 new shares of stock. In other words, 1 full-time employee, 1 part-time employee. Let's look at PSAT. PSAT. This one here, current price is $8.19, monthly payer, 8.8% annual dividend yield. I have a total of 1,145 shares. And once again, you can see the 2021 payout and then projected for the next 12 months. At the bottom here, you can see that it brought in, through the DRIP program, 8.1 new shares of PSAT. So that 8.1 is going to be earning me money on a monthly basis. So that 8.1 now is going to start paying me 8.8% per year, in addition to everyone else in PSAT. Let's take a look at IVR, which was my top performer for the month of October. IVR is a REIT. It's a quarterly payer, pays out 11%. I have a total of 1,225 shares. We see the payouts for 21, 22. If you go to the bottom here, it gave me 33 new shares. I got 33 new shares paying me a quarter out on a quarterly basis or an annual basis. Those 33 shares are now going to be generating 11% per year. Now, what I want to do with IVR. IVR was one that I got in last year, right after the fall of, when the March of 2019 hit, when CV19 hit everyone. This here, I'm going to show you a 1-year chart just on IVR. All right, an IVR 1 year chart. My cost basis is around $2.90. It's paying dividends and so forth. But if you look, not much has really happened in the year. I mean, over the course of a year, it the high of $4.60. 1 year return is about 18%. And then let's take a look. I want to show you this here. This is a 3 year chart. This is one of the main reasons why I bought it. All right. We know what happened here. CV19 hit here. Went down to a low of $1. I mean, it dropped from $15, above 12.50. It dropped all the way down to $1.56. It is a REIT. It's a mortgage. They do mortgage-backed securities. They could do commercial as well as residential. And as you can see, it's been trading, on the low end. But I'm thinking that this here has a lot of upside potential because it's at the bottom. When you're at the bottom, no place to go but up. And just to show you that, this 3 year pattern here is not a fluke. There we go. Let's take a look at that 5 year pattern. This is what it did within a 5 year period. So that's why I'm saying that as the real estate market, and it's slowly recovering when it comes to a lot of the REITs, as it recovers, I think that there's a lot of upside potential. So I'm getting the capital appreciation. I'm going to get the dividends, and as the stock price starts to increase, they're going to start to increase the dividend payout. Here we go. Take a look at this. It settled in around 2016, paying at least $1.38 per share per year. Then all of a sudden, CV19 hit. That sucker dropped to 12 cents. We only got 12 cents in 2020. And as we can see right now, so far, within 2021, we're up to 35 cents. I think that over the course of the next few years, this here is going to be on an upswing year after year after year. So there you have it, a 15% annual yield on my cost basis investment, 35% capital appreciation on my cost basis. Hey guys, I'm very satisfied with the results, and I need to tell you guys to remember this: save, invest, apply what you know, because knowledge is not power. It's the application of knowledge that's power. Guys, I will see you on the next video when we talk about the results for November. Guys, take care.